Alright, good day everyone. This is Venture's fourth quarter and FY 2023 results presentation dated 22nd February 2024. Day of recording is 27 December 2024. Alright, this is done in response to a request on my last video on Venture. Right, fourth quarter 2023 results is an improvement over third quarter. Revenue is up 4.3%. Net profit is up 5.3%. Right, net margin is at 9.1%. which I think is on the high side for them. Cash balances is up to over $1 billion. NAV is at $9.76, right? So cash is the one positive over last year, right? From 800 million to over $1 billion. But if we look at the whole FY 2023 results, it's actually quite bad, right? Revenue is actually down year-on-year wise 21.7%, net profit is down 26.9%, right? So I put this from the old slides on Venture. Right, so you can see the revenue over the years. You can see that 3025 million, right, is actually nearer the lower range of their revenue, right? So over the last 5 years, right, this is the second lowest revenue that they have had, right? So revenue is bad, but if we look at earnings per share, right, is even worse, right? So I put the earnings per share number from some website here, right? So you can see that it normally makes about over $1, even if it's in good years like FY 2022, right, is $1.26 earnings per share. 2019 is $1.25, but you see 20 and 21 is low at above $1. But this financial year, you actually drop below $1 to only 92.6 cents, right? So in terms of net profits, it's quite a bad year for Venture. Right, free cash flow is good, up 100% year on year. Net cash position, yeah, that's great. Right, bank borrowing is zero, right? So one thing good about this stock is they don't have debt, so that's a good thing about the stock, right? They give 75 cents dividends per year. We'll look at the payout ratio later, right? It's getting quite tight, right? So yeah, I don't think I will talk too much about this. We've talked about this before, right? Yeah, 92.6 cents, right? If you compare with last year, it's quite bad, right? And I showed you the average earlier, right? So anyway, strong dividend record. This one most people will know. They've been given 75 cents a year since FY 2020. Right, this outlook were at the end of the last financial year. They said that they expect the demand schedule to be stronger in second half of 2024 versus first half of 2024. Right, so we see whether this plays out or not. Right, so this is the first quarter 2024 results dated May 2024. Right, so you will note that I changed the color of the border to when I'm using another set of slides from Venture from a different date, right? Because I'm trying to cover 1 year of results. Right, so let's look at first quarter 2024 performance. Right, revenue in first quarter was $667 million lower, was $667 million due to lower overall customer demand amid remaining headwinds which are beginning to taper off, right? So again, not a good result. In particular, life science and certain segments of the network and communication market still saw some destocking from first quarter 2024. Means there's too much stock, right? So that's why they are not buying from Venture. Right, margin is 9%, fine. Balance sheet is still strong, not an issue. These things we know. Actually, net cash went up some more to $1.19 billion, which is great. Right, NAV improved to $10.06, right? So this is a good thing. Right, business outlook, again, they say that they expect second half to be better than first half, right? So we move on to first half 2024 results presentation dated 6 August 2024. Right, so this is already another quarter's performance, right? So again, if we look at first quarter 24 to second quarter 24, revenue is up 7.6%, which is good. Net profit is up 5.7%, which is good. Margin is dropped slightly to 8.9%, which I don't think is a big issue, right? Cash flow again, positive 4% year on year. That's great. Net cash position I think went up again. Right, 1.19 billion now. That's a good thing. NAV actually dropped slightly. Right, I think the last round was above $10. Year on year is positive lah. Okay, working capital is improved. Right, so that means what they did is the inventories have reduced. Right, receivables are flattish, payables slightly higher. Right, so yeah, but it's a good thing that generally they're trying to have lower working capital. Right, so first half as a whole results 2024, revenue is down 12.5%, EPS is down 11.4%. You realize that this is compared to 2023, which was a weaker year than 2022, right? So already 2023 is one of the worst performance in terms of revenue in the last 5 years. In terms of earnings per share is the worst in the last 5 years, right? And even so, 2024 first half results, the revenue is down by 12.5%. EPS is down by 11.4%. Right, balance sheet no need to say it's strong. Just look at NAV, right? For the 6 months, the difference is up slightly, so to $9.82, right? Don't need to talk about this. The dividends is the same, right? 25 cents this time round. Okay, again they say they hope for second half to be better. Yeah, they have expectations second half better than first half. Right, so I'll just go cover this part of that I think they didn't say, right? So yeah, first half the revenue is lower year on year, mainly due to softer demand in the first quarter of 2024. Right, so they say that the reason why this half the performance is worse than last half is mainly because of first quarter. Right, balance sheet is healthy. Final dividends of 50 cents, so total dividends for the year will be for the last year will be 75 cents still, right? Notwithstanding the dividend payment, means to say that even after dividend payment, group cash position improved further, right? So that's good. Yeah, not going to say about NAV right? NAV is now $9.82, right? This is the third quarter and the latest quarter result, right? So this is 8 November 2024, right? You can see that group revenue declined sequentially, largely due to soft demand in life science, lifestyle, consumer, and test and measurement, instrumentation tech domains, right? So unfortunately, what they hope for so far does not look like it has come true, right? Third quarter performance is actually poorer than last year's. They expected it to be stronger, right? So this is partially offset by high revenue in network and communications and semiconductor related equipment tech domains, right? So this is the only positive aspect. Net profit declined in line with lower revenue, right? So quarter on quarter, clearly net profit is down, right? Group maintained robust net profit margin of 8.8%, but slightly dipping already right? Cash flow is still strong, right? No, I don't think it's an issue for the first 9 months. Working capital improved, yes, that's great. Net cash position, I think it's not very much different from the last quarter, right? Not going to talk too much. Business outlook, in spite of softer customer demand in third quarter 2024, we expect group revenue for second half 2024 to be relatively stable compared to first half 2024, right? So you see the change in tone. They say now it's relatively stable compared to first half. The last one, they said that we expect group revenue to be stronger in second half compared to first half. So there's a change in outlook already, right? So they don't expect it to be better anymore, right? So they basically miss their own estimates, right? So they say there's good opportunities, but we'll see about it Okay, I don't know. They're not very. I mean, it's very hard to tell with what they've written here whether or not the opportunities will actually come to fruition, right? So we just look at the price chart. I think with the latest announcement, I think it was this price drop, right? It was November 7, I think. Yeah, if I remember correctly. Yeah, I'm sorry, November 8. Yeah, I think so. This should be November 8. I think the price just dropped, right? So at $13, which is roughly currently the price right now, 75 cents dividend is around 5.7% dividend, right? I actually did the payout ratio here. What I did is I compared from 2018, which they had 70 cents of dividends, right, and earnings. I compared. So the payout ratio from 18 and 19 was around 55%, right? So they upped the dividend to 75 cents in 2020 onwards until now, right? But the first 2 years, 2020-2021, right, the payout ratio is 70+%, right? So they seem to be comfortable with 70+%, right? Then 2022 results were good, so same dividend but payout ratio dropped to about 60%. 2023 results are bad, right? So the payout ratio went up to 81%, right? So this is getting tight. That means to say almost, that means for every $10 they earn, $8 is being paid out in dividends already, or $81 is being paid out in dividends. If I were to compare just the latest 2 halves result, that means not including third quarter, but first quarter, second quarter of this financial year, and also third and fourth quarter of last financial year, is even tighter, right? I calculated the earnings to be 87.2 cents, and dividends paid out is 75 cents. That's an 86% payout ratio. So the payout ratio is getting very close to 100%, right? So I'm not sure how badly the next few quarters will be. If they manage to stabilize, most likely the dividends will not be under threat. But if there's some recession, it is probable that dividends may be cut to be prudent, right? So again, none of this financial advice. Please do your own due diligence before you decide to buy or sell, and consult a financial advisor if you need to. Thank you for listening.